In the last 5 trading days, the Nasdaq is down almost 5%. And the next obvious question is which stocks are a steal deal and are the best stocks to buy right now. And the first one out of the 7 is called Hyperscale Data. Hyperscale Data is a tiny company making a huge bet. It's turning an old Bitcoin mining site in Michigan into a high-powered AI data center, the kind of facility that rents out computing power to AI companies. It's a classic pivot story. Instead of mining crypto, they're shifting that same electricity toward AI computing, which pays a lot more and is in massive demand right now. The whole company is worth only about $85 to $95 million. So if even one of their bets pays off, the stock could move a lot. Just days ago, GPUS signed its first big customer, a California cloud company that will rent AI computing space at the Michigan site. The contract is worth roughly $1.2 billion in revenue over its full term. It gets bigger. An expansion option could push the total contract value above $3.0 billion. The first phase is expected to be operational in Q4 2026, with revenue potentially starting as early as late September. After that announcement, the stock jumped rightfully so to 46 cents, but it's now down all the way to levels before the announcement, offering you a golden opportunity. Now trading at a price to sales ratio of only 0.6, this first deal only uses a small slice of the site. The company currently operates about 30 megawatts at the Michigan location, and the signed deal represents only about 7% of the site's potential. Management believes the campus could ultimately support over 300 megawatts of total power capacity. In simple terms, if they can fill it, this one site could host many more billion-dollar deals. For full year 2026, the company is guiding to a record $180 to $200 million in revenue, roughly 80 to 100% growth year over year. The company held about $94.8 million in cash, restricted cash, Bitcoin, and silver, roughly 100% of its entire stock market value. Instead of only printing new shares, the company has been buying its own stock back. Companies usually only do that when insiders think the stock is cheap. Now this is what you got to keep in the back of your mind. It's a penny stock around 25 cents. It lost about $101 million last year, and the headline deal still needs $100 to $120 million of build-out spending that the company has to fund. And that is why I'm forecasting future dilution in my Mr. Invest forecast. Right now they've got 500 million shares outstanding. I'm forecasting that by the end of 2028, that number will be 1,800 million. This will hurt their EPS, and that is why I'm calculating with a dilution adjusted EPS number. Even then, the stock has the potential to be a $1 stock in less than 3 years from now. That's a 488% increase compared to today. And that is why you got to put this one on your watch list and start your own research on it. And the next stock has a monopoly in the US, and this titanium miner is called IperionX. They are forecasting that their revenues will surge 700% in 2026. They got insiders buying the stock like crazy. While sitting in the cross-section of the two hottest sectors, metals and defense, IperionX is America's only domestic producer of titanium, a metal used in fighter jets, warships, electric vehicles, medical implants, and consumer electronics. For decades, the US has relied heavily on foreign-sourced titanium, creating dangerous vulnerabilities in defense and aerospace supply chains. IperionX is fixing that entirely on American soil. IperionX's secret weapon is their patented HAMR technology. In simple terms, it's a smarter, cheaper, and greener way to make titanium. The company's technologies reduce operating costs to a projected $29 per kilogram, which they afterwards can sell on the market for a price of $130 per kilogram. Those are insane margins. Beyond that, IperionX is targeting to 7 times their production in less than 2 years, with a $75 million expansion, largely funded by the US Department of War. The biggest win, in my opinion, is that the US government also transferred approximately 290 metric tons of high-quality titanium scrap to IperionX for free. That's roughly 1.5 years worth of feedstock at current operating capacity. That's raw material handed to them at no cost. Over 10 years of R&D and more than $75 million in total US government support has gone into validating and scaling this technology. They also got a mining project that will produce rare earth minerals. This could open a whole second business line. Based on 6 Wall Street analysts, IPX has a strong buy consensus with a median price target of $53. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be a $90 stock by the end of 2028. That's at least a 200% increase from current levels. These calculations are all coming from analysts' forecasts and the company their own guidance. Insiders purchased $5.2 million worth of shares, which were all placed in March and May. The 2 negative points here are first, execution risk because they have to actually scale up production. And the second negative point is dilution risk a year from now, which might be needed to fund their insane growth as the only titanium producer of the United States. Next up on my top 10 list, I chose AST SpaceMobile. The stock is down 40% from its all-time highs back in January. But let me scare you. They are trading at a price to sales ratio of 262. That sounds ridiculous, but not What if you are forecasting to grow your revenues 2000% in the next 12 months? This is beautifully visualized in this revenue chart. AST SpaceMobile is building cell towers in space. The goal is to connect normal smartphones directly to satellites. This could remove dead zones and bring mobile broadband to places where towers do not exist. It has major telecom partners like AT&T, Vodafone, Google, and others. It is also working on government and defense-related use cases. The company reported a $30 million contract award from the Space Development Agency. They are also well funded. They reported over $3.9 billion in cash and cash equivalents. The biggest risk I got to mention is execution risk. AST must build, launch, and operate many satellites successfully. It also said it aimed to reach 45 to 60 satellites in orbit by the end of 2026, with launches expected every 1 to 2 months on average. Major financial institutions are forecasting AST SpaceMobile will generate close to $5 billion in annual revenues by 2030. This is also visible in my Mr. Invest sheet. I'm forecasting the stock has the potential to be between a $200 and $280 stock 3 years from now. The stock trades now at $72, so that would be a nice return on your investment. The next stock on the list is surprisingly enough an oil stock, and it's called Prairie Operating. This is an independent oil and gas company. Last year, Prop's revenue skyrocketed from under $8 million to over $240 million. For 2026, the company has plans for approximately 40 new wells. Management has set a bold target to nearly double their net income this year. When a company tells the market exactly how much more profit they expect to make, it shows a high level of confidence in their current assets. The company's oil and gas assets are worth over 10 times what the entire company is priced at on the stock market. Another bullish signal is that recently insiders bought over $4 million worth of stocks. This is showing high confidence in the valuation disconnect. Prop recently moved to the Nasdaq, which is like moving from the minor leagues to the majors. This puts the stock on the radar of big institutional investors and index funds. The forward PE ratio is just 2.16 times. Most oil and gas companies trade at 8 to 12 times. This is deeply cheap. The price to sales ratio is just 0.25. For investors with patience and a stomach for small cap risk, this could be one of the most undervalued energy plays on the entire Nasdaq. And the fourth stock on the list is called FUBO. The reason why you got to take opportunity of this basically massive crash is because this company is in the best financial state ever, but at the same time it's trading almost at all-time lows. It's now trading so extremely cheap, so that offers a perfect entry point in this stock. And I'm forecasting in my Mr. Invest sheet that the stock has the potential to be between a $20 stock and a $40 stock by the end of 2028. That's basically a 200% increase from current levels. Next up, we got a stock sitting in the data center sector, and this one is still pretty much undiscovered. The stock is called Soluna Holdings. Revenues are forecasted to surge by 53% in 2026, trading at the price to sales ratio of only 3.6. Analysts got the price target of $5, which is a 200% upside. They now serve two industries, Bitcoin mining and artificial intelligence. A major bullish point is that Soluna is not only chasing AI hype, it is building around energy infrastructure. Soluna closed a $53 million acquisition of the 150 megawatt Briscoe wind farm in West Texas. And by doing so, they went from being an energy renter to an energy owner. That shift is massive. Demand for US data center power is projected to more than double, from 25 gigawatts in 2024 to as much as 66 gigawatts by 2028. Their plan is to transition Project Dorothy into an AI campus as its primary workload in the medium term. Soluna's development pipeline now exceeds 4.3 gigawatts across multiple sites, including projects like Catty 1, Catty 2, Grace, and the Dorothy campus. The 83 megawatt Catty 1 project reached substantial completion ahead of schedule, showing they can actually execute and deliver. Soluna has started early development of Project Dorothy 3, described as a planned 300 plus megawatt HPC campus. They have runway to execute their vision for at least 3 to 5 months without dilution. Soluna regained Nasdaq compliance as of May 1st, 2026, clearing a major cloud that was keeping many investors on the sidelines. This means they're no longer at risk of being delisted. The stock is cleaner to buy for institutional investors. The company is still losing money today. This is a growth story, not a value play, but the pieces are falling into place. Owned energy, growing customers, massive pipeline, AI tailwinds, and cash in the bank. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be an $8 stock by the end of 2028. That's at least a 400% increase from current levels. Next up on my top 10 list, we got IAD Gold. What makes this stock so special is that it's a great play if you want to have a stock that will benefit from inflation, especially now with higher oil prices, and the fact that the only way to manage the US debt is by devaluing the dollar and print a whole lot of money. With this setup, gold will usually appreciate a lot. And who benefit the most from that? Gold miners. And IAT Gold is the best out of them all. It's the best funded small cap gold miner in the the world, focused entirely on Nevada, the single best place in the world to mine gold. Nevada is known for its miner-friendly laws, clear regulations, and world-class gold deposits. They control more than 250 square kilometers of gold-rich land in Nevada, a massive portfolio of projects. Their plan is to go from producing about 25,000 ounces per year today to a target of 600,000 ounces per year by the early 2030s. That's a 24 times increase in production. Franco-Nevada, one of the most respected gold royalty companies in the world, agreed to a $250 million royalty financing deal to fund their Nevada development plan. When one of the smartest, most experienced companies in the gold industry writes a $250 million check to back you, that's a huge signal. They now have the money to execute their plan. No more guessing about funding. CEO Richard Young personally bought a large chunk of company shares in late March 2026, a move that sent the stock up 9% in a single day. When the CEO buys shares with his own money, it's one of the strongest signals possible. He believes the stock is going higher. The average analyst price target for IAUX is $3.2. I'm forecasting in my Mr. Invest sheet that the stock has the potential to be a $10 stock by the end of 2028. That's a 600% increase from current levels. But remember, that's only if they execute.